With over 25 days of horizontal consolidation, a large move is coming for Bitcoin. What are the macro and smaller timeframe charts looking like? What are the technical indicators suggesting? And what will be the most likely outcome? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. We're here to take a look at Bitcoin on the macro and short-term charts, discussing them from a technical and structural perspective, really focusing on the next move for Bitcoin and what impact this move could have on the higher timeframes. Before we do get into it, smash the like button, hit the comment button, and subscribe to the channel for daily videos on Bitcoin, focusing on the facts, the data, the technical and structural information, the relevant economic news and news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram via the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything to keep you in the loop with not only Bitcoin, not only cryptocurrency, but the relevant economic data as a whole. If you're interested in our VIP channel, click the pinned comments, go to the top. You can find more about that over here. Our entire trading track record over 29 months with over a 79% win rate. And you can see all of our trades in our VIP have exact entries, exact targets, exact stop losses. You'll get access to that and the 5 group chats we have with all of our members sharing, trading, and learning on a daily basis. Let's get into a video, guys, starting off with the market data. How are we looking for today? Overall volume sitting at 69 billion, up 31% in the last 24 hours. As for liquidations, we have seen it rise 151% to around 66 million. And again, we had a CPI data come out last night, so it did have a bit of a surge in volatility, which did increase those liquidations and overall volume in the market. As for July, we are currently still sitting around negative 0.2%, coming on about 25 days or so of horizontal consolidation, just above that $30,000 level, but just under that $31,000 level. So very tight consolidation. We'll be discussing that further in today's video. Looking at our overall volatility index on our 30-day, we are starting to plateau out. On our 60-day period over here, we can see again, we are slowly creeping toward the downside, but very much plateauing out altogether. Looking at our liquidations for the total 66 million, we can see a very even split. About 48% in shorts, 52% towards our longs. So a very, very tight split over here. If we take a look at the breakdown of these liquidations, we can see the majority of these liquidations actually came around about leading up to our CPI release and a bit after our CPI release. So we did have a lot of liquidations in the last half of yesterday. Moving into today, we can see overall volatility and liquidations are starting to dry up a little bit, but we are expecting a pretty big move soon. We'll discuss that in the video. Moving on to our DXY has absolutely fallen through the floorboard, moving down below our major support at 101.5 to 100.7, a historically important support. Moving back on the chart over here, we can see this level provided support for around 450 days. This is relatively bullish for the market, right? The DXY is going down. That is generally bullish for stocks, bullish for crypto on a higher time frame. Intraday, if we look at the daily movements, is not too much of a big deal. The correlation improves or increases in terms of negative correlation the higher the time frame you look at. So we zoom out to a week, we zoom out to a month, we then generally see the correlation gain that correlation between, a lower number to a higher number being more correlated. If we look at the correlation in general, it's around negative 0.7. So we look at the correlation on a smaller time frame, it's going to be closer to 0, maybe a little bit in the positive, maybe sometimes a little bit in the negative. So when we're looking at the overall direction, we can't say for sure that the DXY has dropped and therefore we're going to see the markets rally. But if it continues down over a higher time frame, then we can say for sure that the markets are more likely to continue upwards on a higher time frame. So this is quite significant, however, because this level of support, again, has been in support for a very long time. Our next chunk of support is sitting all the way down over here at around 99.3 to around 97.7. So as you can see right now, even now in the video, we are seeing a trickle toward the downside. We definitely do need to close this daily candle back above this level of support to reclaim it. Until then, it is not looking too amazing for the DXY. Moving upwards, we can see our downtrending resistance. This resistance is still our downtrending resistance, and we can actually go ahead and now expand that for basically infinite amount of time over here. And if we do break above that level, whether it be over here, whether it be over here, that could result in a move toward the upside. So we're watching for that in the future. Looking at the CPI data, we did actually see CPI come out relatively bullish. We saw, if I go back to the data over here, we can see we actually saw the month on month go into the red. We saw, if we're looking over here, we saw core, wrong one over here, sorry guys. If we look at inflation rate over here, we can see actual inflation for year on year went down a little bit as expected. Our month on month was down around 0.2 from the previous, which is bullish. The overall inflation rate was down, and the month on month inflation rate is underneath the consensus, but slightly above the previous. So we had a tiny bit of a mixed signal over there, but overall, it is relatively bullish. The only thing I'll be worrying about over here is this, but we do have PPI coming up later today, which is going to be very interesting. If PPI comes out relatively bullish, and again, guys, negative, incredibly bullish, we can expect the market, particularly with DXY, to continue toward the downside. Moving on from there, guys, looking at the stock market, again, we are seeing some strength over here on S&P following the CPI release, but not too much happening until we break above this uptrending resistance. Still very much in the same spot over here, guys. We can definitely reject from this level, so watch out for resistance, watch out for rejections, watch out for weakness as we approach this trend line and as we approach a weekly close above or on 45k, 4,500. Looking at the Dow Jones, similar thing occurring over here. I'm not going to get into it too much. Let's go ahead and jump into Bitcoin, because I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Bitcoin's in an odd position. There's a lot going on in the charts over here, and there is really, at the same time, not much going on the charts, right? If we zoom out, we are in this horizontal consolidation. We've been in this horizontal consolidation now for pushing around 24, 25 days. And as we all know, consolidation is compression. Compression results into large moves. We have compression, we have consolidation. It represents decreasing volume, decreasing momentum, decreasing volatility. And when we break out of these ranges, it generally results in a strong directional move in that direction. So we're looking at the current horizontal range. We are sitting between 2 major resistances. The major resistance sitting between the 30,800 to $31,000 level, and we'll see it on the chart in a second. We can see the 30,800 represented by this orange line, and the 31,000 level represented by this orange line, and that resistance zone represented by that red block. We can see that we've rejected from this level numerous times. Every single time we have actually broken up from that level, we have seen a strong push towards 31.3 to 32. This area being another major level of resistance. If we zoom to a higher time frame, we can see that 31.3 to $32,000 level is a huge resistance that we've retested numerous times. If we go back in history, we can see, as per the VRPV right over here, we can see the moment we get above 32,000, the VRPV significantly drops off, meaning we enter a low resistance volume range as per what we saw over here. Therefore, volatility will increase and the direction will most likely move upwards. And therefore, we can say that 32,000 to 31.3k is what we call a macro bullish trigger, meaning the moment we break above there and get strength above there, we're likely to continue through that level and continue upwards to our next major resistance. So an incredibly important resistance for macro charts. We'll come back to the macro analysis later on in the video. Let's get the short term out of the way. So that is our upper resistance level. If we look at our current support level, we are looking for the red zone just below. We are looking for this range between 29.8 to 30. And again, we can see just as many retests and bounces and liquidity wicks below this level as we can see on the top side, right? These two levels are major points of liquidity, demand, and supply. If we're looking at the VRPV, we can also see that we have a huge amount of volume in this range. If we break above this level, we can see that massively drives up. If we break below this level, it massively drives up. So we know that these levels here are both bearish and respectively bullish triggers, meaning when the price actually breaks above these levels, we do expect surges in volatility as we've seen, surges in volume as we've seen, and the price to massively move in these directions. The question then proposes is, for the top side, are we able to get above 32K? We'll talk about that one later. And for the bottom side, are we going to see a fake out? Are we going to see a continuation downwards to our next support? Again, we'll talk about that one in just a moment. So, as we can see here now, guys, as we described, we are very much in this tight range. These tight ranges, these consolidation ranges, they're like pressure cookers, if I had to use an analogy. The longer they compress, the longer they cook, the more pressure they build up, the larger that move is going to be. And the longer we see this compression in this horizontal range, the more volume, the more orders, the more liquidity, the larger we see these moves occur when they finally break, whether it be upside or downside. And if we take a look at the current structure is a neutral pattern, right? We have a horizontal consolidation between two identifiable points, our resistance and support. If we look at the measured move structure from these levels, we take the low to the high point of this structure. We can go ahead and copy and paste that to our perceived breakdown point and our perceived break up point. And this is going to be our overall measured move of these ranges. We can see the measured move of this range takes us just under around 29,000. The measured move of this range takes us just over 32,000. Again, if we have to see a break upwards, we could definitely see a strong move in either direction, a break downwards, a strong move toward the downside. So let's start off by talking about the downside. If we happen to break underneath this level, and I'd be looking for a 4-hour candle close, as we have seen yet to this date, no 4-hour candle closes below. I'd be looking for a 4-hour candle close below. We are likely to continue quite aggressively downwards to fill the gap between 29.8 and 28.8. Our first level of support will be found in the middle range around about 29.2. I will go ahead and say 29.2 as per this wick high, and we can see a little gap here in the VRPV would be that first level of support. We could potentially bottom out, we could potentially consolidate, we could potentially develop a new market structure before the next move up or the next move down. If we do continue through that level, the next target will be 28.4. 28.4 being our high levels back over here in March and, in May, of course, and coming into June 2023. These two high points right over here and right over here. We can see when we actually finally broke above that level, we saw a strong move upwards, and ever since then, we have been consolidating in this horizontal move. So a logical level of liquidity would be that same level back over here at around 28.4. 28.4 holds significance on the macro chart as well, and we'll discuss that when we get into a macro analysis in just a moment. If we look at the downside, we'll be looking for that break toward the downside, okay? If we're looking at our technical indicators, we can see on the 4-hour chart, we are currently sitting underneath the 50 EMA, we're currently sitting underneath the POC on the smaller time frame. If we zoom up a little bit, we'll be able to see the POC pop up in just a moment. We can see there it is, we're underneath the POC. We can see momentum has this overall downward trajectory. So we do have overall downward momentum. This is negative momentum. And we can see our volume again is creating these local lows. So we take our CVD over here, our cumulative volume delta. We can draw horizontal levels in. We can see we're making staggered lows over here, which is an overall sign of general weakness. We do need to start breaking through these levels at around 24K to actually make some highs in the volume, to actually give the price the strength it needs to potentially flip the momentum and push through its resistance. So right now, this consolidation is looking generally weak and could result in that move downward. Again, the trigger for these moves, the actual trigger for these moves will occur above and below these levels. We are in a chop zone. We have seen much times of weakness and many times of strength within range, and none of these scenarios have really developed. We see strong moves up, strong moves down, over and over and over. These chop zones are designed to set traps. They're designed to mess with your head and make you jump into positions that you're not prepared for or not really looking at the data for what it is. If you want to take the best possible entries, wait for those triggers. Watch the technicals, trade the metrics, not the price. The price is very deceiving in chop zones. It is designed to trap people into late longs and late shorts, okay? Watch the market. Let's go ahead and talk about the bullish scenario. So for the price to push upwards, we are also looking for, again, once more, a break over this level. But we're also looking for a momentum shift, right? We're looking at that market cipher B. We're looking at that RSI technical indicator here to suggest we have overall shifts of momentum. As we can see that the momentum right now is moving downwards on the 4-hour, which is suggestive of weakness. We can see if we draw a diagonal trend line over here, we can see that we've actually broken down on that RSI, again, suggestive of weakness. We'll come to the smaller time frame in a second. We do need to start breaking over these levels. We do need to see the price break this downtrend resistance on our RSI to have a positive momentum flip that will give us the strength to push higher and higher. If we start breaking above 30,800, we can see the volume and respective resistance starts to decrease. So the probability shift in favor of the bulls when we start breaking above 30,800. And again, on the flip side, in favor of the bears below 30,000. Let's go ahead, guys, and look at a slightly higher time frame from a technical perspective, and then jump into our small time frame analysis, and then finish up with the macro charts and discuss what the macro charts are looking like, how both of these moves, whether it be a down move or an up move, could impact the macro charts in relation to the 4-year cycle, in relation to the next bull run, and in relation to the overall structural integrity of the higher time frame trend. So, looking at the 12-hour chart, we can see, of course, not looking too amazing over here. We have that respective downtrending trend line on the RSI, again, representing momentum is falling. We can see over here, guys, on that mark OB, momentum is also moving downwards. Not looking amazing. As per the overall trend, the trend is representing decreasing volatility, decreasing momentum, decreasing velocity. We can see that as per our moving averages. Our moving averages are compressing, and the price action is dropping into the smaller time frame moving averages over here in comparison over here. We had a whole heap more volatility at this price range here as we do over here. Volatility measured the distance between the 50 EMA and the price action. Look how much volatility we had. Look how that's kind of drying up and compressing. So we are compressing in volatility. That is suggesting a move will come soon and will be quite explosive. Look at the 50 EMA. The 50 EMA is pushing up into this range. A loss of the 50 EMA could be the trigger for a move downwards. We'd also be keeping our eyes on that. Right now, I am not seeing anything on the 12-hour chart from a momentum perspective that is suggesting this price action is gaining strength. If anything, right now, it is showing us weakness, and it's showing us that the price action is overall weakening. If we go to a daily chart, we can see more or less the same thing. It is not showing us any signs of strength. At the moment, it is showing us weakness. For it to show us strength, we need to start busting through its range. Again, 32K is the level we need to break above to see any sort of macro strength and push upwards. But the smaller time frame could be different. So let's go ahead and take a look at the hourly chart and break it even further down to maybe a 30-minute in a second. So moving on to the smaller time frame, we'll go ahead and bring up our CBD once more and talk about the next immediate move for Bitcoin and then get into macro. So what are we seeing? We have our respective uptrending support line right over here. Awesome, that is our respective uptrending support line. We can go ahead and copy and paste that one over. We have a potential rising channel formation, which we can go ahead and input over here. We can see that local high points meet up with these levels of liquidity and resistance. Therefore, on the smaller time frame, we can say, not with a high degree of certainty, but with an assumption, we can say we've broken down or currently breaking down this uptrending support level we have developed since 23rd, which is going to be coming on what we're looking at around 5 or 6 days now. So a breakdown of this level from a measured move perspective will actually take us underneath the 30,000 to 29.8K level. At the moment, the narrative is bearish. The short-term narrative is bearish. I'd be looking for a continuation downward, particularly if we lose this local level of support right over here as represented by the POC. We lose that 30,250 level, we can expect a move back downwards. Until then, this could be deviation, this could be a fake out, we could see strength and push back over. When would I flip short-term bullish again? Let's break it down to a smaller time frame. If we start breaking back over these high points right over here, I'd be looking for a move back upwards. So right now, we're kind of breaking down. Structure is turning bearish. Not looking for a continuation down until this local low is lost. Not looking for a continuation up until the price can regain strength and push above 30,430. Okay, that is all looking at a smaller time frame. The more probable direction right now is downwards. Let's take a look at the macro charts. How could this impact the macro? So the first thing I wanted you to remember was the price level of 28.4K. We've talked about this a fair bit on the channel, but 28.4K, according to the weekly chart, will be the level of most defense. It will be the level of which holds the most significance in terms of the strength of the weekly trend. To give you a quick rundown, this represents a bearish trend overall, okay, on a macro monthly scale. Okay, perfect. If we take a look at the price action, we have a reversal, we have a daily uptrend when we break through this level over here. The daily uptrend transitions into a weekly uptrend, okay, when we break through this local resistance and the midline. Perfect. The weekly uptrend turns into a strong weekly uptrend when we break through the upper band of the Gaussian channel. So for the strong weekly uptrend to then turn into a weak weekly uptrend, we would have to lose the upper band of the Gaussian channel once more, which by no coincidence is sitting at 28.4. So we want to see the price continue upwards like we have every other single time we have broken through that Gaussian channel on the weekly chart. We do need to remain above 28.4. If 28.4K is lost, that doesn't mean the weekly uptrend is lost. That doesn't mean the weekly trend is bearish. What that will mean is it will mean we are likely to see an extended correction back down to retest either the downtrending resistance of our descending channel formation or what will be most likely the 25K level once more. If we lose the 25K level, that is when we flip into a bearish weekly trend. This over here, if that occurs, this will be incredibly bearish and incredibly bad to see according to the 4-year cycle and according to the prior data we have seen, as that would represent something that has not occurred before in bull run cycles, in bear run cycles, and most importantly, in the phases between the cycles, these gray phases. We would have not seen a scenario where we have broken a monthly candle above our respective horizontal resistances and then fallen to the point of which the weekly trend is turned negative. If we take a look at our prior 2 cycles, the particular points of these levels that we have broken up on in accordance to our Gaussian channel, we can see every single time we break above the Gaussian channel, we have that monthly candle break above that horizontal resistance. We have seen that in the 2016, the 2019, and we've now actually seen that in 2020. We have seen it 3 times. But what we haven't seen in the prior 2 times is a scenario where we get the breakout and then we crash back through that Gaussian channel after the breakout. Every prior time we have seen the breakout that has resulted in a rally upwards to retest that dotted trend line you can see on the left hand side, which represents the dead cat bounce high of the prior cycle. You can see instance 1 over here. We came through, we bounced, we continued, we retested that dead cat bounce high. Awesome. Tick number 1. Number 2, we can see again over here, guys. We saw that breakout. We continued up to retest that dead cat high, dead cat bounce high over here before we continued back through. And in this instance, if we follow the same pattern, realistically, we should see a bounce continuing upwards to retest that point at 48K before we see another move downwards. If we break back below a weekly candle of the 28.4 level, okay, and potentially 25K level, that would invalidate the pattern that I have just described and potentially push the price lower. This would be the worst case scenario for Bitcoin if we're looking at the bullish perspective. If we're looking at for what could be setting us up for a bull run, this would delay it. This would be the worst case scenario. The short term has a massive impact because if we break above 32,000, guys, we are more than likely continuing upwards to 40. It is going to be awesome. But if we lose this 28.4K level, that puts us at risk of continuing lower. It doesn't eradicate the 4-year cycle. It doesn't eradicate the bull market. Well, we're not in a bull market yet, but it doesn't eradicate the possibility of seeing a bull market as per the 4-year cycle. It doesn't eradicate the weekly uptrend, but it puts us in a position of weakness, and that is not good. Right now, we are actually in a position of strength on the weekly charts. It is just the daily chart that we are struggling to break through as resistance, which could result in a pullback. Will the pullback be strong enough to actually push us into a bearish trend? That is a question for another time, but for now, we have to assume two things. Number one, resistance is resistance until it's not. We are likely to see a correction. We are likely to see a move down to 28.4. Number two, if we see the move to 28.4, we are likely to find support there and defend that level as per the weekly chart trigger points of strength. And number three, if we do continue in the general trajectory of what we have seen in prior cycles, we will see an eventual move above 32,000, which will result in a move to 48K. Thanks for watching, guys. I hope you enjoyed. Check out the Crypto Academy. You can find more information in the links below. And I'll catch you guys in the next one. Cheers.